got $64 trillion in the stock market. That money's not in miners. And so, but when that S&P rolls over, and I think it's going to crash, I think it's going to go down 40% is my expectation over the next 6-9 months. When the S&P crashes, that money, I believe, will rotate into the miners. So we'll have this initial correction in the S&P and in gold and silver and the miners. And the question is how deep. So the last one was 12% in gold. I think this one, it depends where it starts from, but I think this one's going to be another deep one, 10 to 15%.
Welcome to another edition of Triangle Investor Interviews. I'm your host, Lucian Valkovic, and before I announce my guest, just a quick reminder of a disclaimer. This interview and all my interviews are not a recommendation to buy or sell any shares, products, or services. Always do your due diligence and consult with your financial advisor. I am joined today by respected precious metals analyst, author, and founder of goldstockdata.com, Mr. Don Durrette. Very happy to have you back in the show, Don. Welcome.
Yeah, Louis, thanks for having me on. Looking forward to it.
Thank you. Let's start with macro and the market outlook. Gold and silver have smashed records in this year, yet Wall Street still ignores, okay, maybe not ignores, but not fully appreciate the miners. My first question to you is, what's the one macro trigger like S&P crash, Fed pivot you see forcing $1 trillion rotation into precious metals, and how fast could it actually happen?
That's a good question. I'll try not to spend too much time answering it, but it's not easy to answer in 1 minute. So for me, the trigger, and I've been waiting for this trigger, is the S&P 500. Right now, as far as I'm concerned, it's the only chart that really matters for gold. I've basically been saying that, gold, even though it's leading this year, gold's up, I don't know, I forget the exact number percentage-wise, but it's up over 50% or something. But gold has been leading all year, but the S&P 500 has also been going up all year. So they're kind of correlated. So I actually think that the S&P is kind of more important than the gold price here. For instance, the Wilshire 5000 is $64 trillion. So the whole the valuation of the stock market is $64 trillion, which is kind of massive, right? And that money hasn't went into the miners. They really haven't been interested. Wall Street hasn't been interested. And the reason why is because they're making money. If they're making money on Wall Street, they're not going to go into a speculative asset, especially a speculative asset that they're not used to buying. They're not used to buying mining stocks. That's not where they focus. There's only one miner. Well, there's only one gold miner in the S&P 500, Newmont. There's no silver miners. There's one. They don't. I don't know how many in the Russell 2000, but very few. So the mining stocks are not something that they focus on or look at, and so they're currently not. So that's the trigger. Now, gold, this is really an absolutely fascinating setup, so we should explain it because it's historical, it's epic. When silver finally broke out above 2000, it kind of never looked back. It did not retest 2000, which is unusual because that was kind of a significant level. It just kind of went through it, just kept going. Then it went through 3000 and it didn't retest 3000 and just went through it again and just kept going. And so gold it's been on a rampage since it got through 2000. I mean, 2000, 3000, and went all the way to 4350. And now we're at 4166. We're starting to retrace. We went down 12%. We're starting to retrace back. But gold has been this absolute monster. And when it broke out, above 2000, I was like, you just had this feeling it wasn't gonna look back. And it didn't. It just kept going, going, going. It became kind of the go-to trade for kind of the smart money. It's like it was kind of it became the buy the dip asset in my opinion, and it still is to this day. So still silver, um, and we won't go into. I want to go into the macro reasons of why it's going higher and higher and higher. Let's just say I'll just throw two factors in there is the US bond market and the Ukraine war. Those were kind of the triggers for gold to just take off and not look back. And those are still in play here. But I wanted to go back more to the trigger of what's going to push it higher and higher. So we got through silver. When silver joined the party in August of this year, when silver got above 40, it didn't take long for silver to go from 40 to 50. I mean, it was like, and I didn't think it would. 40 was a really important level. Got above 40, and now we ripped all the way to 54.50, and today we're at 53. And so that was a really important thing to happen for the gold and silver mining space when silver kind of joined the gold party. So gold has basically been ripping, right? 2,000 to 44,000, doubling. Now silver, when silver joined the party, because gold miners, most of your gold miners also mine silver. So it's important for their balance sheet, their revenue, their margins for their silver production to also, because there's not that many, it's very rare for anybody to be a pure silver miner. So silver miners mine gold, gold miners mine silver. So it's important that silver join the party for that space. And when silver joined the party at $40, I saw a huge leap on my website, absolutely huge. I mean, and everybody basically came running in, but this is the early crowd, the retail crowd. This isn't Wall Street. Yeah. This isn't Wall Street at all. This is the retail crowd recognizing opportunity. And so you had a lot, and so that's when the HUI broke out. So in August, you had a breakout. The HUI is a gold miner index. You can't buy the HUI. It's just an index of the large gold cap. But that's what I've been using because it was around when I started in 2004. The HUI was around, so I've been using it for 20 years. And so the HUI, it basically it took off with silver. So you had a breakout. However, that breakout went from August till the middle of October. And then middle of October, we had a correction, a severe correction. Gold went down 12%. Silver went down 18%. The HUI went down 22%. That was correction number one. And we'll get to correction number two, which is coming. And so now we get to, what is the, so we're up and running, but believe it or not, a lot of people, a lot of gold and silver miners right now are on the sideline. The reason why they're on the sidelines is because they had this big rip, went all the way to 43, and they basically got off the train. They took their profits, and they're waiting to get back in. And so you don't have a lot of sentiment, strong sentiment right now. A lot of people are like, because they know what I'm about to tell you. What I'm about to tell you is that even though we broke out in August and we had that correction, that's not the last correction because the S&P 500 is so important. So the S&P 500 near an all-time high. Today it's at 6,800 and the all-time high is 6,900. So it's basically knocking on the door of an all-time high. Yeah. And so the S&P is at all-time high. You got $64 trillion in the stock market. That money's not in miners. And so, but when that S&P rolls over, and I think it's going to crash, I think it's going to go down 40% is my expectation over the next 6-9 months. When the S&P crashes, that money, I believe, will rotate into the miners. So we'll have this initial correction in the S&P and in gold and silver and the miners. And the question is how deep. So the last one was 12% in gold. I think this one, it depends where it starts from, but I think this one's going to be another deep one, 10 to 15%. So we're going to get another, just like we had in October, but it could be more severe than last time. Could be. And so, in other words, so, basically be ready for that big, deep correction that's coming. I think it's inevitable, but I don't think gold can lead here. I think the S&P, like I said, it's near an all-time high. So is gold. Gold's about $200. It's at 41.50. It needs to go to 43.50. So it's about 200 from all-time high. I do not think gold will get an all-time high before this next correction. But it might get to 42.50, maybe. It'll get above 4,200 next week's a good chance possibility. It might get them, but my feeling is that gold and silver are not going to take off and lead here when we're getting ready to, the stock S&P is ready to crash. I do not believe we're in a melt-up phase where the economy can support the stock market keep going higher, higher, higher. I think the stock market, the weakness there is too severe. I think that we're basically topping. We're topping here is my gut, and we're going to get ready to crash. And so the miners are trapped here. Make the long story short. I think the miners are trapped here and they can't go much higher than they're at before the next correction. So I'm actually not buying. I usually buy the first of the month in December. That's usually my strategy. I get paid in the first of the month and I buy stocks the first of the month. I'm not have no plans to buy this month. I'm waiting. I'm on the sidelines. Now I'm fully invested, but I'm on the sidelines for December waiting. I'm gonna be waiting for that next correction before I start buying the dip. But again, it's all about the S&P in my opinion. But once that S&P rolls over, stops going up, I think we're gonna get rotation. Again, $64 trillion. We're gonna get rotation out of that into the miners, which happened after the 2000 dot-com bubble crash in January of 2000, and then 9/11 in September 2001. After those two events happened, the miners did extremely well. They went up 8x from 2001 to 2007. So I think the same thing is going to happen here. Now, that 8x I think has already started. Yeah. So we're not going to get 8x from here, but we're going to get significant moves. I'll end it here. So the HUI is currently 660. I think it's going to go 1,800 to 2,000. But before it goes there, I think it's going to go back down, potentially all the way back to 500.
Excellent point. Let's return. You mentioned bond markets. If the bond market fails, as you predicted, which legacy financial asset, bonds, tech stocks, real estate, gets wrecked hardest, and why should everyday investors actually care?
So the bond market is more important than the stock market. A lot of people don't know that, but the bond market, that's the credit market. That's the thing that holds everything up, if you will. Bond market is much more important than the stock market. Even though all eyeballs are on the stock market, trust me, the bond market is much, much more important. And I believe the reason why I own gold and silver mining stocks is because of the bond market. I don't believe, now this is my thesis. It's the reason why I own gold and silver mining stocks. I could be wrong. It's a total thesis. It's a spec bet. I don't invest in gold and silver miners because it's a good industry, it's a good sector, and I like the business. No, it's a terrible business. I own gold and silver mining stock because I'm speculating on a trade. This is a trade. And the trade really comes down to one thing. It's the bond market. It's the US government bond market. And I firmly believe that the only reason why gold's at $4,100 today is because the bond market is becoming fragile. Now, some people can argue with me, but we'll look back in history. If you look at when gold basically started going, kind of broke out at 2000 and kept going, the Ukraine war, that changed the whole dynamic of international trade. And the US government, and the US has basically had global hegemony since the end of the World War II in 1945. The US has basically been the global hegemon. You could say Russia was kind of competing, but not really. It was always the US. And so we've been setting the rules for 70 years, 75 years. We've been controlling the rules, setting the rules, the whole deal, right? But that's all starting to break down. And the US, and here's the kicker to it all, is that the US has basically been living off of foreign money for 30 years, exporting debt. Foreigners have basically been supporting our standard of living. And if you think that we can just go, cold turkey and not need foreign money, that's a stretch. And so that's where the fragility comes in on the bond market. We are dependent on foreign money. And if they don't show up, and also if they sell, so if we basically have net selling instead of net buying, and we have to finance it all on our own, it's game over, in my opinion. That's why I own it. And the way I looked at it is it's an inevitability. It's just a matter of when. So I've been doing this for 20 years, waiting for this outcome. So it's been a 20-year wait. It's been a long wait, but now I can see the end zone. It's right in front of me. But this is actually very, very sad, because if I'm going to win here, if gold's going to be the winner here, something's going to break in a bad way. It's that old thesis. People say, do you want to live in a world, in that world? And so this isn't fun for me, really. I'm not really gloating and saying, oh, look here, I win, I'm a winner, I win. I always tell people, I do a podcast on Saturday night, and I always tell my listeners, I tell them, I said, we can't, like in The Big Short, when Brad Pitt said, stop dancing, people are getting injured here. And that's what's going to happen. This isn't a good outcome. This is a really bad outcome. If the US bond market fails, our way of life gets impacted in a major way. And that's what I think is going to happen here. And so here's my thesis. My thesis is that the US government at a certain point will not be able to fund what it needs. And that's where the fragility comes in. In other words, the bond market will never fail overnight. But what it will do over time is it will become more fragile. And right now, when I was in school, they basically taught us that US Treasuries are the risk-free asset. U.S. Treasuries are risk-free. You can buy 3 months. Warren Buffett, he's sitting in cash. He's got 3 months, 6 months, 1 year T-bills. Those are risk-free. Well, we're entering an era when they're no longer risk-free. That is fragility in a nutshell. That's fragility in a nutshell. And that's what we're heading towards. And so once the U.S. bond market becomes fragile, it's like a house of cards ready to fall. And my thesis from day one has always been, if you try to live on debt, eventually you're gonna have a problem. Eventually, it's a matter of when. And so we've been kicking the can. We've been using that term for years and years. We're just kicking the can. We're not going to deal with the problem. And kicking the can means expanding the debt, expanding. So now we're expanding it at $2 trillion a year. The interest for 2025 was $1.2 trillion. That's 4x what it was pre-COVID. Pre-COVID, we were at 300 billion a year. Now we're at 1.2, 4x. So we've reached a breaking point. We're at 120% of debt to GDP. And we can't put the genie back in the bottle. That's the problem when you start to use debt to finance, or not finance, but basically to create your standard of living. So the problem is you can't create more debt than revenue, because you're basically saying I can't service my debt. It's impossible. So we've been increasing debt at an 8% level annually, average level since 2000, 8%. Most people don't know that. Yeah. 8% a year. Yes, we've been increasing our debt since 2000, 8% per year. Everybody knows this one, what I'm about to say. You cannot grow at 8%. We've never grown at 8%. It's impossible. We grow at 1 to 3%, sometimes 4. 4 is about maximum, and that's in a quarter. But you don't grow 4% in a year. It's basically 1 to 3 and 8. So we have more than two. We're adding more than 2x debt to revenue, and that's what we've been doing over and over and over again. But to make matters worse, to create more fragility into the system, if you will, is we've created basically an era of easy money where we've allowed people to finance mortgages at 2%, finance corporate debt at 0%. So we've created this massive leverage on top of the government bond market.
Yes.
And the government bond market, where it gets kind of integrated, if you will, this is where the fragility really starts to spin out of control, is that the government bond market has to be the savior, if you will, of all the other debt, of household debt and corporate debt. So if household debt gets into problems, corporate debt gets into problems, the U.S. government, the U.S. bond market has to come to the rescue, or the Fed has to come to the rescue. Now, if the Fed comes to the rescue, they do it through printing money, which is the debt bubble that I'm explaining. So all of these triggers, if you will, they're slowly converging. And that's the reason why gold has been trending higher, because at a certain point, the whole world, not just the United States, but the entire world has been dependent, if you will, on dollars and US debt. That's what's on their reserves. People have more reserves in US treasuries than anything else. Gold is starting to catch up. But US treasuries, right? So if the whole world, their treasuries their number one reserve on their balance sheet is US treasuries. And suddenly US treasuries, the Ukraine war, now all of a sudden US treasuries are no longer this risk-free event. At that point, things change. And Wall Street's like, no, nothing's changed. Everything's fine. The stock market is going up, up, up. So gold is the truth teller. Gold is telling us the truth. Gold's going up because of the fragility I've been talking about. The fragility that's building, it's building and it's building and it's building. That's the truth teller. Everything else is lying. Bonds are lying. Stock market's lying. Everybody else is lying. They're lying. The stock market, this 6,800, 6,900 S&P 500, it's a pack of lies that the valuations should be at this level. This is the reason why Warren Buffett has 30%. 30% of his funds in cash. 30%, $350 billion in cash. And Warren Buffett, I mean, this guy is probably one of the best investors of all time. And in the 1960s, he went all cash. He closed his fund. He basically said, "I can't make any money in this." So he's actually somebody who, he's a value investor. I mean, he's proven that over and over again. He sees no value, he's out. Michael Burry, another value investor, he said, "Screw this. I don't understand this market. There's no value. I'm out of here." He closed his fund down. Same thing Buffett did in the 60s. Jim Rogers, another guy that's been around forever, fantastic investor. He basically said that everybody's out there trying to tell you that the business cycle is gone. It doesn't exist anymore. He goes, "I got news for you." He goes, "Be concerned. Be very, very concerned that the business cycle didn't go away." And basically, he's basically warning. And he's also said what's coming, he thinks, is going to be the worst recession that he's ever experienced in his lifetime. That's what he said. The other guy, Jeremy Grantham, who's been around forever, he said this is the most vulnerable market he's ever seen. So everything I've been explaining about is vulnerability, vulnerability, vulnerability. These guys that have been around forever are saying the same thing. Yes. And so gold's the winner. Gold's the winner. And it's just a matter of, because the only thing, see, gold wins both ways. It wins if the Fed prints money to basically keep everything going. Just keep print, keep it all going, right? Kick the can, right? Gold wins. And if they do austerity, if they do QT, which they seem like they don't want to do that now, then they create a recession and gold wins. So gold wins either way. The only way gold loses is an outlier. It's like a 6 sigma, 9 sigma event. And that is that basically Trump's strategy works. That Trump basically brings all this money, floods all this money into the US, and inflation stays low and we start growing the economy. That's a possibility. But again, I think it's kind of a 6 sigma event. I don't think that's going to happen. I think Trump is so far behind the 8 ball, there's no way he can get out of that. He's cornered, I think. He's handed a very lousy hand. Now, Wall Street, ironically, they actually think that Trump has like a 75% chance of succeeding. They're like all in. There's no cash. I mean, there's no cash on the sidelines. They're like 99% of their money's in the stock market. They're like, we're going to keep winning. We're going to keep winning.
No.
It's to me, I actually think that these business shows are comedy hours. But they're comedy hours because all they do is talk about the positives. That's the comedy hours. But at the same time, they're tragedies. So sometimes I watch and laugh. Sometimes I watch and I just go, oh, ouch, because
Yeah.
I see that, they're wrong and it's going to be painful for everybody. But it's kind of mind blowing. But this is how bull markets end. Bull markets usually end in euphoria. And we have euphoria right now. Stock market, the top 1% and the top 10% in this country have done extremely well because their investments have done well and their house is probably worth a lot. They got equity in their house and they got a ton of money that they've been on Wall Street. So, the top 10% are just, they're ebullient. Most of them are ebullient. Some of them realize, something doesn't make sense here. Some of them do that, but they're like the minority. They're like the 5%ers. The other 95% are like, everything's fine. This is great. We're just doing well. The American preeminence isn't going away.
Yeah, right.
So
that's a great overview, Don. Let's go to the part with the stocks. I got like 20 plus stocks from my followers. So if we can cover them, some pros, cons, and your rating for them. The first one would be Hecla Mining. What's your take on the current valuation of Hecla?
well, first of all, I want the listeners to realize he never gave me this list in advance, so I have no idea what stocks you're going to throw at me.
Yeah,
But
sorry, disclaimer. I didn't give the list. And Don, one other thing, 1 minute answer per stock because I have more than 20, please.
Okay, so I know them all though. I've been doing this for 20 years. My database has 850 names, so I pretty much, if I don't know, if it's not in my database, then I'll pass on the stock.
Sure.
But Hecla is a top 5 silver miner, and the thing that's beautiful about Hecla is all of its properties are in North America. So it's the only one. There's only 15 silver miners with market caps over 100 million. There's very few. They're rare as heck. And so I always say you got to own the top 5, and Hecla is one of those top 5 stocks. And so a lot of people are like, Hecla doesn't do well in bear markets because their management team, they've really never been focused on stock shareholders per se. They say they are, but they don't manage the company that way. They basically always have a lot of debt on their balance sheet, which is not how in the mining business, that's not how you benefit shareholders. But in a bull market, they have a really good brand name, and they are a top 5 silver miner. So they're a top 5 silver miner. As far as I'm concerned, I rate these companies. So I rank them, rate them. So I have them in my top 5. The thing that makes Hecla so inviting, kind of a must-own stock of you, I think the top 5 should all be basically owned, is that the location of the mines are all in North America, and it's highly leveraged to the silver price. And the other one is Wall Street's going to buy it. They're going to buy Hecla like candy because of the brand name, the location. So it's just kind of a must-own. But before we go to the next stock, I just want to do the top 5. The top 5 is Coeur, Coeur, Pan American, Hecla, First Majestic, and Endeavour. Those are your top five. I consider them all must-owns. But before I go further than this, I want to say that buying gold and silver mining stocks is not investing. These are not Microsofts, or 3M. These are not normal companies. Mining is a very highly volatile thing. It's speculated. Only buy mining stocks with the money you can afford to lose. You're speculating. It's like gambling. Speculating and gambling is the same thing. So you're gambling. You're betting. You're betting on the silver price go higher. So if you buy these things, that's what you're doing. You're totally betting on that price going higher.
Yeah.
But yeah, so I just want to preface it with that. I don't consider mining stocks investing. You could go down 25% in a single day in a stock, and most people can't handle that. So your portfolio, you're exposing yourself to extreme risk, extreme volatility. So I want to preface it with that. Okay, who's number two?
Number two, let's maybe continue with Fresnillo.
So Fresnillo isn't in the top five, but it's number six.
Okay.
It's close. And the reason, and Fresnillo is the number one silver producer. They produce over 50 million ounces of silver a year, all focused in Mexico. They don't trade in North America, but they just acquired a gold mine, Probe Metals, a development project in Canada. So maybe now they'll trade in North America. But it's kind of ridiculous, a company of their size ignoring the North American market. They trade in the pinks in North America. It's really one of the, Hochschild does it too. Hochschild also trades in the pinks. Both of those, I think, those are the only two pinks that I think it's okay to own. Other than that, I wouldn't own any pinks stock. So they also trade in London. So Fresnillo, I had this list called the Mormons, which are the top five plus Fresnillo, plus Hochschild, plus Aya. Those are my best eight silver miners. I call them the Mormons because you can marry all eight of them. Now, Fresnillo is going to do well, but I don't have it in my top five. Now, it was very uber cheap, and I told everybody, I said, Fresnillo is the cheapest Mormon, and it was trading like $6. Now it ripped all the way to 30. So it's no longer the cheapest. As a matter of fact, after it ripped to 30, now it's probably the priciest. It still has five-bagger upside. Fresnillo is still a really good hold. I own it, and I'm gonna ride it all the way to the top. It's a very high quality company, generating a lot of free cash flow. But it's like I said, it's number 6 on my list. But yeah, it doesn't have really any red flags per se. Strong management team, strong free cash flow. I like free cash flow. That's what I chase. So.
Yeah, you mentioned Aya Gold and silver. Why do you like that stock?
Boumadine. So I have Aya all the way down number 8 on my ranking on my silver, and the reason why is because Boumadine won't get into production until 2030. So they have two. So Aya's in Morocco, which I think is fine. They're producing right now 5 million ounces at their Zgounder project, and they're generating free cash flow. It's $1 billion company. And everything, and they're doing fine. Everything's fine. But the flagship is a project called Boumadine. Boumadine is going to be a monster project, very, very profitable, but it doesn't get into production until 2030. So we're not really going to get paid for that stock until construction begins, and probably late 28 is, I'm hoping. So it's not, it'll slowly trend up, but it won't perform as well as the other miners because we have to wait and wait and wait. It's kind of a longer term. It's almost like a development stock. But Boumadine is absolutely a thing of beauty. I mean, it's a big property. For instance, it already has 450 million ounces of silver equivalent at 400 grams. So it's huge and it's high grade. Plus, they just came out with a drill hole today, so it already has 450 million ounces, and they came out with a drill hole. It was the biggest one, 15 meters at 2,000 grams silver equivalent. Now, you never see a company mine a head grade of 10. Yeah. So 10 times 30 is 3,000, but I'm sure, 300. Yeah. So this is like a 30 ounce per ton, mine. They're not going to mine that, but it's uber profitable. Now we don't know. They're going to have to do some follow-up holes, but that just I've always known this, that Boumediene is going to get bigger and bigger and bigger. So it's 450 million. It's hard to predict how much bigger it's going to get, but it's going to get bigger. So this is a big mine. It's going to be worth a lot of money. But we got to wait for it.
Okay. The next one is Guanajuato Silver.
Yeah, so Guanajuato, they just did a deal, Baldonitos, this week, and I just absolutely loved it. So they did a financing about a month ago, and a lot of people sold the stock, and got out. People were really upset because they did a financing, and everybody thought they didn't need to raise that much money, and it was like the third financing they've done in the last 18 months, and people got really angry, and a lot of people sold, and I said, no, 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 you don't sell a 10 bagger. It's like, even with this dilution, this company has a ton of leverage to the silver price. You can still put up a dilution. You don't sell until they dilute you into the ground. And that dilution did not dilute us into the ground. There was still a ton of upside still left. And so people made a mistake and sold. Now, this acquisition that they made was a game changer. So they're currently at 3.8 million ounces. And this company, this Baldonitos mine, mined 2.5 million in 24. So it's in care and maintenance 6 year, but in 24 it mined 2.5. So if you add 2.5 to that, it gets you to 6.3. Now I'm valuing them at 6. So every 500, so they added like 40% to their production, and they only paid $50 million, which is absolute steal. Okay, so every 1 million, I don't know why silver mining companies can't figure this out. Nobody wants to think into the future. Every 1 million ounces of production is worth approximately $500 million. Now, how? It's really simple math. You take 1 million ounces times $100 of silver minus $50 for all-in cost. It gives you $50 million free cash flow. Now, that's a conservative number in two ways. First of all, I think the cost will be below 50. And two, I think the silver price will be above 100. So I think that $500 million is actually conservative. So I'm only going to give them credit for 2 million ounces of production for this mine. That's $1 billion. So they paid 50 million and they're getting $1 billion back. Conservatively, they could be getting 2 billion back.
Yeah.
All right, so now I have a tool that I used to value companies. So I threw it in there, 6 million ounces at $125 silver, which is my expectation, and $50 cost, and it pops out a 25 bagger. That's the kind of leverage Guanajuato has. Now, they're probably going to bite us. I've added some dilution in there too for that 25 bagger. But they're probably going to bite us a little bit more on dilution if they can't borrow the money. If they can borrow the money, we're in great shape because they're going to need some money to pay this deal off. If they can get a loan, they get a 10-year loan, that'd be fantastic as long as it's not convertible. But if they can borrow money, maybe they can, maybe they can't, probably can't. If they dilute us, then we probably won't get our 25 bagger. But guess what? We're probably going to get a 15 bagger. So I see this company. If silver prices get to 125, which is my expectation, I'm a speculator. I'm speculating. I don't care about $75 silver. I don't care about $50 silver. That's not where I'm looking. That's not where my projections are. My projections are 100, 125, 150. So if we hit my numbers at 125, I'm expecting a 15 bagger. Can't beat that with a stick. Next stock.
Yeah, the next stock is Integra Resources. What is your score here?
So Integra, they did a really smart thing. So they had this big project in Idaho called Delamar. And Delamar is a development project, and it also has a bunch of silver, which is fantastic. It's a gold project, a low-grade gold project with silver. But it becomes uber valuable at higher gold prices. So it was really, really cheap. And then they acquired a producing mine in Nevada, the Florida Canyon mine, from I can't think of the name of the company that went bankrupt. But they acquired it for a good price. But the thing that I liked about it, and I hope more and more companies do this, is they pivoted from development to being a producer. And when you're a producer, You can generate free cash flow and use that free cash flow to advance your project. Plus, you can build up your balance sheet with cash. I think they have like 50 million now on their balance sheet. Build up your balance sheet with cash, which makes it easy to finance the project. So I love Integra. I said Balañitos was a game changer for Guanajuato. Florida Canyon was a game changer for Integra. A lot of people have ignored Integra. Now they're kind of late to the party, but it still has huge upside. It's kind of amazing. This really shows you how Wall Street is not involved in the mining stocks. When a company like Integra can have this type of a low valuation, it's kind of mind blowing. These stocks are all trading at 1/3 to 1/2 of what they should be valued at $4,000 gold. And if you go to $5,000 gold, it goes lower.
Of course. Correct me if I'm wrong, but you downgraded to sell 1911 gold, right?
I don't know where that one came from. 1911 is probably my favorite stock.
That's a question from my follower. That's why I said correct me if I'm wrong, but I wasn't sure about that. So please give me your take on 1911.
Yeah, that's the one thing about social media is, rumors can be flying. No, 1911 was my favorite stock coming out of Beaver Creek, and it really hasn't changed. The reason why is because the way that I invest, I'm a speculator using future gold prices. 1911 had a mine, the True North mine, a mill that fully permitted with a deposit that basically went into care and maintenance, and the company went bankrupt because of lower gold prices. So the only hindrance is the margins making money. So the gold price, it crashed from 2011 down to 2013. And when it went down, their margins went to zero. They went bankrupt. They closed the doors. But the only hindrance was the price of gold. If the price of gold wouldn't have crashed, so the price of gold went to 1,900 in 2011. If it would have just stayed there or went higher, that mine would still be in existence. They'd still be mining. So the only thing that, again, hindered it was the price of gold. And so I'm a speculator, and I've actually, Sean Hendricks, the current CEO, when he came online, I was basically telling him, get ready to get that in mind in production. Get the board, get it ready, get it ready, get it ready. This was back when gold was under 2,000, and the board was like, no, we're not going to do that. We're just going to go drill over here, because the mining companies are conservative. They refuse to project higher gold prices. So gold prices ripped higher, right? Now they're like, okay, let's get this in. Now let's move. This mine could be in production today if they would have moved on it earlier. But they took their time. But it's going to be, they will turn it on. And the one thing I told them, when I talked to Sean back when he came on, it was a while ago. And I told him, I said, you realize, you're sitting on a gold mine. This is a slam dunk. All you need is higher gold prices. And that's been my mentality the whole time. And so it was trading at 28. When I was at Beaver Creek, it was trading at 28 cents. It printed it, I think, like a 50 bagger. And now it's doubled. It's like 55 cents, but it still trades as a 25 bagger, depending on dilution, of course, depending on the multiple, depending on the gold price. But my targets, if I look at my targets, this thing has huge upside still, and people are ignoring it. I'm actually shocked that it's only trading at 55 cents US. I think it should easily be trading at $1. The market is but it's no different. If you look at Integra, you look at Guanajuato, these stocks are all trading at half off. They're what they should be trading at. And so, yeah, so 1911, no, I absolutely love that stock. It's hard for me not to rank it number one of all the development projects out there. I had it ranked number one coming out of Beaver Creek, was my number one pick. And I can't really find another development project that I could rank ahead of it.
Fair enough. I'm all ears about the next one, Vizsla Silver.
Yeah, so absolutely love the Panuco project. So Vizsla is one of those companies. It's a must own. So it's not in my top. It's not a producer. It's a development project. So I only have producers in my top 8. But if you go to the development side, I have Discovery number 1 because of the Cordero project. So silver development projects, I have must own Discovery Silver because Cordero, they're going to produce 35 million ounces, 35. I mean, it's just huge.
Yeah.
That's where they're going to start. They're going to start at 35, and then it's going to probably go up from there. They have 1 billion ounces, so their feasibility study is only focusing on half of the project, 500 million. So 500 million ounces at 35, that goes a long ways. I mean, 10 years, you still got 150 million ounces left. So the Cordero project, I mean, when I look at the free cash flow of the Cordero project, I mean, that just makes me drool. So, Discovery also has massive gold projects in Canada that I love. So, but they're a producer, so they're not really a developer, but that silver development project would be number one. But number two is Panuco, the Vizsla project. They're going to start at 20 million ounces, and I think they're going to hold it or go up. So their feasibility only shows 20 million for the first 2 years. But the CapEx, the thing that's amazing about Vizsla, the CapEx is $250 million, which is peanuts for that much production. I mean, it's like a 1 year payback. And so I'm really excited about Panuco because I think that maybe they don't hold 20 million in year three, but by year 4 or 5, I think they'll be back to 20 or higher. Because they have a lot of exploration around Panuco, and I think they're going to be adding silver. My only worry about Vizsla is that they sell the project because it's so valuable. I mean, when you look at the free cash flow, again, I use 100, 125, 150 silver. When you look at the free cash flow, it's absolutely astonishing, right? And if these companies get 20 multiples, the upside is absolutely tremendous. Now, I didn't like, might as well state my opinion. I didn't like what they just did with they redid their debt. So they had a $300 million debt, straight debt, and they decided to use convertible debt down, and the convertible debt is 5% annually, and I think it matures in 2030, 2031, and it converts at like 585. That'll all convert before they even get into production. It'll probably convert next year because they're trading a little over $4. I mean, that stock's going to double to 8 in a hurry, and once it doubles to 8, everybody's going to convert. And so people are going to want to get their hands on those shares. But so what if you get 5% interest for 5 years? So my point is that it converts to like 43 million shares. They said that the reason why they did it is they wanted to get rid of the covenants. There was covenants on that debt that they didn't like. And I feel like their hands were tied behind their back. They didn't like the covenants. They wanted out, so they decided to convert over. It's not going to hurt us as shareholders. It's not really going to hurt us. The 43 million shares isn't going to hurt us. It's not awful, but I didn't like it. Basically, Vizsla also has a royalty, Vizsla royalties that they own 17% of. That royalty today's worth $240 million. So they own about 40, they have 40 million. So, but that NSR, they basically it was theirs, and they spun it out into a royalty company. I think that was a bit of a mistake because I think if they would have held that royalty would have been worth 2x their CapEx. They could have used the NSR, in my opinion, they could have used that as collateral, and got a beautiful loan without any covenants. But they couldn't because they spun it out. So they could have used it as collateral, and then once they get into production, then they sell it, right? And that would have been the way to go. But these companies, they don't think down the road. They're always thinking near term, right? And the other thing that they do is they look at the trailing average. I mean, most of these companies, they think in terms of, let's look at the gold trailing average for the last 3 years. The world has changed. Wake up. This is a new world. That 3-year trailing average is hokey. It makes zero sense. Next company.
Don, we have a lot of companies still to cover, so 30 seconds per company. Silvercorp Metals. What's your take?
It's not in my top 10, but probably 11, 12. I'm not really worried about China anymore. I don't think that there's, Xi and Trump seem to be getting along. I don't think there's going to be any war in Taiwan in the next 2 years. So I don't think China's a problem so I think that risk is diminished. So the only thing we're really worried about is Ecuador. So they have two projects in Ecuador. Now the issue, Silver Corp is probably going to be fine. I do own it. The key here is, how much money are they going to spend to advance these two projects? How long it's going to take? Are they going to run into any political issues? But on the whole, I'm not a big fan of Ecuador. DPM Metals just lost their environmental license, so it's not a uber safe place to mine. Now, the one thing that I really like about Silver Corp is they own 28% of New Pacific. And New Pacific has two massive projects in Bolivia. Two. I mean, one of them would be beautiful. They have two. And so I think that Silver Corp, I wish they'd buy it tomorrow. I don't know what they're waiting for, because the longer they wait, the more they're going to have to pay. Just buy it now. So New Pacific is a game changer for Silver Corp. I probably should rate it higher. I probably should have it in my top 8. But I have Avino and Santa Cruz as 8 and 9 and 10. And then probably Silver Corp 11, Andean Precious Metals, and then US Silver. Those would be my top 13. And so Silver Corp's right there. I mean, like I said, there's only 15, and I think those are the 13 must-owns. So I do put it in the must-own category.
Okay.
Okay, next doc.
What about America's gold and silver?
Yeah, I just mentioned. Oh, I said U.S. gold and silver. I meant America's gold and silver. I'm glad it came next, because people are going, "What the hell are you talking about, Don? There is no U.S. gold and silver." Yeah, I meant America's gold and silver, which is the same thing as U.S. gold and silver, right? United States, right? Yeah, I really like Paul Hewitt. I think he's going to do a fantastic job. The thing that's beautiful is Galena has 3 shafts. They're currently only using 1. And so I think they're going to basically use those other 2 shafts, expand production. Plus, their project down in Mexico, I think, is going to generate a lot of free cash flow. I think it's called Casola. That one's fine. Then they have another project in Nevada, which I think they'll end up selling and focus more on silver, but they won't sell it now. They'll wait till they'll be smart about it. Wait till gold's at 5,000 and get a really good price for it. Who knows? Maybe they'll JV it and keep 50. I think that would be a smart thing to do. JV it and keep 50%. Maybe I'll send an email to Paul and tell him that. They also just acquired the Crescent mine, which is going to add 2 million ounces a year. And again, every million ounces is $500 million. So I think Crescent's probably going to add 2 million ounces. That's $1 billion, and they paid peanuts for it. And so, I mean, they paid a lot less than what Guanajuato just paid. So yeah, I'm a fan of America's Gold and Silver. It's in my top 13 must holds for silver miners.
Okay, GoGold, the next one.
Yeah, so GoGold, I mentioned Cordero number 1, and Panuco number 2 for my development. Number 3 is Los Ricos. So those three development projects, those are the best 3 silver development projects on the planet. You got to own all 3. So I absolutely love GoGold. As a matter of fact, GoGold probably has more upside. It does. GoGold has more upside than those other 2, because those other 2 have kind of flown. I mean, they've ripped higher. Both of them have. I mean, if you look at the charts on both of those, GoGold hasn't. So GoGold is really, the one people might ignore, and it's got a ton of upside. Oh my goodness. So now the thing about Los Ricos is it's 2 projects. You got Los Ricos South and Los Ricos North. I'm surprised they haven't got the permit for Los Ricos South, because Silver Tiger got theirs a couple weeks ago, and I don't know why they didn't get theirs. It's kind of shocking to me. I thought they'd get it. I thought they'd for sure get their permit in Q4, but I'm not worried. They will get their permit. I'm assuming they will get their permit, and they will begin construction on Los Ricos South next year. And once they get into construction, I think that stock will start trending and will never stop. It'll just it'll be like a monster. And then as soon as Los Ricos South is built, they'll pivot over and build Los Ricos North. So yeah, I'm a big fan of it.
Okay, NexGold mining.
Gold Mining Inc.
No, no, NexGold.
Oh, I thought you said gold mining. NexGold. Okay, so NexGold was one of my favorite development projects. It's went up a little bit, so it was valued under $200 million, which I thought was just silly cheap, absolutely silly cheap. Because they have two projects. So basically they were giving us one project for free, and now it's up to like 350 million. So it has popped a little bit because they just got their permit. So the upside, went from I'm not sure, 20 bagger down to a 10 bagger, maybe more than that. Actually, I think it has actually more upside than a 10 bagger, but it was uber cheap not that long ago. Like the middle of last summer, July of last year, it was like 180, so it's like doubled. So it was really, really cheap, but it's still cheap because you get two projects, two in one. Goldboro is permitted. They will begin constructions on it next year. This is just like GoGold. As soon as Goldsboro is finished, once it's built, by the way, it's a high-grade open pit, those are easy to build, easy to make money. The CapEx isn't very high. I think 250 million. As soon as it's done, they pivot over to Goliath and build Goliath. And so again, we have to wait for that second project to get built. So both GoGold and NexGold, it's interesting you have them back to back.
Yeah.
Both of those stocks we have to be patient with. There's certain stocks you have to be patient with, and you don't worry about them. You just ignore them. It's like, in other words, the share price, whatever. It's like it went up 5%. Where it's like irrelevant. The only thing that's relevant is the gold price, that it hits our target, and that they build both mines. That's the only thing that matters. So we might keep an eye on it, but it's not that relevant. What's relevant is the second mine. So even though so GoGold is building Los Ricos South, and NexGold is building Goldboro. It's like not a big deal. It's the next mine is the big deal.
Yeah.
Perfect example is Discovery. So Discovery, they buy this Porcupine mine from, I can give a couple of examples here. They buy the big Porcupine mine in Canada, and they're generating free cash flow. The only relevance of that project, the only relevance is that it makes it easier for them to finance Cordero. That's it. It's the only relevance. It's so what they're making cash flow. It's like, okay, put in a little cash. What's important is Cordero. Another good example is Greatland Gold. Greatland Gold is mining at Telfer, generating a bunch of free cash flow, just like Porcupine. And their cash is like up to $500 million, right? Telfer is irrelevant. The only thing that's relevant is it's adding cash, and that's all good. What's important is Havieron, the next project. Yeah. So you have to focus on the price.
Let's conclude this list with the one you mentioned, the Gold Mining Inc. I'm curious to hear your take on them.
So the thing about Gold Mining Inc., and this is what my experience basically comes into play here, is you want to own a stock that you have an edge. Mm-hmm. And the edge is that if something with a high probability happens, you win. So for a producer, your edge is that all you need, for instance, Hecla, was the one we started with. The edge is that you own the stock, and the edge is that it's got locations in North America. If the price of silver goes up, people are going to buy it. You see the edge? You see what I mean? We got an edge there, right? A development story. The edge is Vizsla. The edge is they have enough insiders. It's a low CapEx. It's economic. The edge is all we need is the silver price to maintain itself or go higher, and we win. You see the edge?
Yeah.
Strong, right? Strong. Those are the stocks you want to own. You want to go down your list, and you want to every stock that you put your eyeballs on. You want to know. Oh, I got an edge. I got an edge. I got an edge. I got an edge. If you look at a stock and you don't have an edge, that's a problem, right? Well, guess what? Gold mining Inc., there's no edge.
Oh, wait.
That's the problem with it. And so I actually own the stock as an optionality play, but the problem is they don't know what their strategy is. They couldn't tell you. They've never been able to tell you. They've never been articulated. We want to own a stock where a company has a plan. They have a plan, they have a strategy, they're carrying it out. All we need is for them is to execute. With gold mining, it's a lot like owning an exploration stock that doesn't have a big discovery yet. It's kind of a hopium stock, but they do have gold in the ground. We're hoping that somehow it turns into value. We're hoping, they got all that gold. They got 18 million ounces of gold, Don. At some point, it's going to turn into value. Maybe, but we have no idea how. There's no edge.
Yeah.
Right? I'll give another example, one other one. Free Gold Ventures. I was actually talking to one of their large shareholders yesterday. And the thing that's beautiful about Free Gold Ventures is it's an exploration play optionality, but we have an enormous edge. And that edge is that private shareholders, not the company, but private shareholders own more than 50% of the shares, and they're consolidated into two groups. The first group is Eric Sprott, who owns about 27%. And then this shareholder I talked to, he basically has a group that own about more than 20%. And so combined, those two groups will determine the value that shareholders get. In other words, they're shareholders, especially like Eric Sprott, they're shareholders that they want the best return they possibly can get, right? And so shareholders it's a unique situation where they're sitting on 30 million ounces of gold and they're not going to give it away. It's a unique situation. They're not going to give it away. So as a shareholder, all we have to do is sit back and wait to get paid. That's an edge. And so that's an optionality edge. So you want to get an edge. If you don't have an edge, find one.
Yeah. Two more crossed my mind. Sorry. Kirkland Lake discoveries. I don't know if you know anything about them.
Okay, so this is an exploration play.
Yes.
All right, so in a bull market, you want to have an edge and you want to have stocks that have elasticity. Now, what is elasticity? Elasticity means if the price of gold, let's use the price of silver. I'm going to use Hecla. The price of silver goes up, Hecla goes up. The elasticity correlation between Hecla and silver is quite high. So in a bull market, which we're in right now, you want exposure to that elasticity. Now, if you have a development stock, you're also going to get elasticity, such as Vizsla or NexGold or 1911. They're going to have the same elasticity because investors are going to they're going to benefit from these higher silver prices, right? Whereas if you have an exploration stock, there's no elasticity unless they have a bunch of gold or silver in the ground that's valued under the market price.
Yeah.
That's the only way it has elasticity. But if they don't, the only thing that's going to drive that price higher is drill results. That's an inelastic situation. So I basically avoid exploration stories in a bull market, early drill stories. It's hard for me to get excited about early drill stories in a bull market. Now, in a bear market, I might be a little bit more excited.
Sure.
Because I'm trying to find returns and we're in a bear market. But in a bull market, I'm not going to chase an early drill story. It's going to be hard to get my attention. But where I like optionality plays. I'm all right with those because we just sit back and get paid. It's just a matter of when the value, and the key here is you want to buy the gold and silver in the ground well below the market rate. So the market rate for gold is about $50 to $75. That's how much it costs to find it. And so that should be the minimum that you should sell for. But right now, so you want to find companies that are below $20 in the ground. Now, Banyan was like all the way down to like $6, $7, $8 in the ground. It was like crazy cheap. I remember I saw it at least at $7. And now it's ripped over 30, just like that. And so that was a beautiful optionality play. You knew I buy that stock, I can sit back and get paid. And so Kirkland. Now, I basically have two rules. Rule number one is it an optionality play? Right? That's number one. Number two, is it early in the Lassonde curve?
Mhm.
And in tandem with being early in the Lassonde curve, does it have an exceptional discovery hole? If it doesn't fit those two criteria, I pass. You should pass too.
Okay, okay, fair
But
enough.
if you find a company that's early in the Lassonde curve. Now, what is the Lassonde curve? The Lassonde curve basically it's basically it's a share price curve. And the share price starts at the very, very bottom and it starts going up a mountain, right? You want to buy it very early before the price starts going up. So basically, it means the stock is uber cheap.
Yeah,
So if you find an exploration company that's uber cheap and they come up with a beautiful drill hole, that's a great situation because if they have a follow-up hole and then another follow-up hole, it becomes an inelastic investment. It's a thing of beauty. And that's the reason why people love exploration. Because if you make that discovery, you just sit there and just just let that deposit get bigger and bigger and bigger. Snowline's a great example. It was trading at $35 million when they made that discovery hole. Now it's trading $1 billion. That was a beautiful situation. So if you would have bought that initial discovery hole, if you would have jumped in, you'd have done fantastic.
definitely. Don, how can people reach out to you, please?
So if they own any gold and silver mining stocks, then they want to check out my website. It's a beautiful tool for anybody that owns them. If you don't own any gold and silver mining stocks, then and you think maybe I want to own some of these things, read my book. So my book's on Amazon. Just go there, Don Durrette, look for the black cover, the gold book. The thing that's good about my book is it's basically a textbook, pretty thick, 300 pages, and it's pretty thorough on explaining what is a junior miner, what is a mid-tier, what is a producer. It's very good, very thorough. So after you read that book, you'll basically you'll have an idea. Maybe I do want to own these, maybe I don't want to. And it also will tell you which ones have the better risk reward. So website for mining investors, book for newbies.
Don, that was a brilliant chat. I really, really enjoyed it. Thank you very much for joining me today, and I hope to host you sometime soon again.
Thank you, Lewis. It was great.